we get on, folks? Luke here from LAGFX. We're back today with another Sunday Sessions video. If you aren't aware of what Sunday Sessions videos entail and what we do within these Sunday Sessions, is we basically give you guys zones and areas to work with and look to implement into your own charts, and then you can obviously use that information to potentially profit and trade alongside the LAGFX team. So this is a way of giving you trading opportunities throughout the week, but also an insight onto how both me and James trade in the Forex markets. If you do go on to enjoy this video, don't forget to leave it a thumbs up. All the support you guys provide is very much appreciated. What I'm going to do is go through 3 or 4 pairs, and then I'm going to pass you over to James, and he is going to do the same. So jumping straight into the markets, you can see that we have the Great British Pound to the US dollar on screen. You'll notice that I've highlighted 2 potential supply zones or sell zones. These are areas that we can look to potentially sell from. So if you haven't marked out these zones for yourself, pause the video now and do so, because these are, as I said, are going to be areas that we can look to sell from. They are holding supply that would hopefully flip the supply and demand balance. As you can see at the moment, we are within a corrective phase. We have been trading lower. We had confirmation of a break of structure to the downside, which confirmed longer term bearishness. As if we look here, you can see that this was the initial corrective wave. We've then had price trade lower, the break of structure confirming an end to this correction and the start of its next impulse. And now we are within a fractal corrective wave within this new impulsive wave taking us lower. So with that being said, we want to look to potentially sell from these zones and have this zone here, this demand zone, as a take profit area that we could look to close those potential sells from. Now, as we can see, price is pulling back, probably picking up more demand to carry on taking price higher. So what we can do is we can look within this initial fractal impulsive wave for any demand zones that price has to trail back into in order to pick up more demand. So if we just go down to the lower time frames, just trying to find any valid demand zones that price needs to come to clear before trading us higher. So we can see here actually that price has and is actually around this demand zone here. This marks a demand zone or a last sell to buy region. This candle here, it represents unmitigated orders. Price has just recently tapped into this, and we can see how price has really started to slow. So the momentum of bearishness has slowed completely, and we are seeing equal lows being put into this market. So this is very good signs that there is enough demand here to continue trading price higher, or at least interrupt this this temporary bearishness. So this is a very good point and a very good area to mark out for yourself. So again, mark out this zone as I am. So this is another area that we could actually look to buy from. So we could now, with that being said, we could look to buy from here, trade price higher into this supply zone, where we're then looking to close those buy positions and actually execute selling orders, trading price lower. So our so if we just draw a path just to represent what we believe or what I believe price is going to do. I believe price is going to dig deeper into this demand zone. It's going to pick up a load of demand. That is going to be enough to drive price higher. It's going to tap into this higher time frame supply zone, which is going to flip the supply and demand balance completely, and then that is going to trade us into this zone. So as I said, we can look to buy before we sell. So this is great. This gives us 2 trading opportunities. So if you haven't done already, mark out this demand zone. What we need in terms of confirmation to actually enter in on this market is a break of structure to the upside. So we could look at current structure, and we can see that this here represents the last structural high within this fractal structure. Okay, why? Because this high went on to create the lowest low that it has done. So I'm just going to mark this out, and in terms of a fractal confirmation, we would want a break of structure here. Okay, so break of structure is needed here. So realistically, we want to see price, we'll just get the path tool, we want to see price trade up, trade back down into another fractal demand zone, and then take us up into the market. We would look to get involved in this pullback here. So when it comes to actually placing our position, we may be getting on along here. We'd have our stop loss just below the structural low created, and then our take profit obviously set way higher into the demand zone, into the supply zone, should I say. So the reason why we set our stop loss below this structural low is because if we are following the laws of bullishness, as we know, the lows are protected and the highs aren't. So this low here should be protected. We shouldn't see price come to surpass that, which means our stop loss shouldn't be activated. Now, if we just zoom out and we take this all the way up into our supply zone, you can see here that it actually gives us a risk to reward ratio of nearly a 1 to 18. So if you're risking 1% of your equity, which may be £10, let's say, there's a potential to gain back 18, which would be 180 quid. You know what I mean? So look at it in percentages and then obviously translate that into monetary value. So that is my analysis for the Great British Pound to the US dollar. We are looking to buy before we sell longer term, and I believe that this could offer us with some brilliant trading opportunities. So that is my Great British Pound to the US dollar analysis. Now moving over to the AUD USD. As we can see here, again, I have highlighted two potential sell zones. These are going to be areas that we will be looking to sell from. These are valid supply zones on the higher time frame structure. If I just zoom in on this, you'll see that they highlight and represent last buy to sell regions. These, again, are unmitigated candles that need to be cleared in order for price to continue trading us lower. Now, we've had a very similar situation arise here. As you can see, I have highlighted another demand zone. If I go down on time frames, you will see that it is and represents a last sell to buy region. So I think it was as low as the 1 minute. Let me just double check. Yes, exactly that. So you can see here that we have a sell to buy region that has been left unmitigated. Price hasn't come back into this price. Price hasn't trailed back into this zone, an area, before trading us higher. So again, that has been left unmitigated, and we are now seeing price sit within this. Price has come to sweep it many a time, and I do believe that price could now start to take us higher. So this here represents the last structural low. This here represents the last structural high. Again, why does it represent the last structural high? Because it went on to set a new lower low. And obviously we are currently following the laws of bearish structure. So this is the last structural high. So in order for me to look to place positions in this market, I will want to see this high break, as this would be confirmation that we are no longer following the laws of bearishness and we are now following the laws of bullishness. So again, where would we look to get involved in buy positions? Well, once we are delivered with the valid break of structure, so a new higher high to be created, as we know, that is following the laws of bullishness. The lows are protected. So we would get involved as soon as we have confirmation of a new impulsive wave taking us higher. Again, our stop loss would be set just below the structural low, and then our take profit would be set at the supply zone up here. Again, this gives us a brilliant risk to reward return. Not as great as the Great British Pound to the US dollar, but still a brilliant risk to reward return of a 1 to 12. So for every 1% that you're risking, you're looking at gaining back 12% on this position. Now, obviously, this is just an example. It's not going to be exact figures, but this is a very good estimate in what we could earn back from this potential trade. So, yes, again, I want a break of structure from this zone here, or from this area in price, as this marks the last structural high within this bearish structure. Just to summarize on this pair, if you haven't marked out this potential sell zone, please do so, as it's not only going to act as a place that we could sell from, but it is also going to act as a place that we can look to place our take profit. So the sell zone is 0.7043 and 0.7059. So just be aware, as of the open, if we start to see bullishness being produced, as soon as we are delivered with this break of structure, wait for the pullback into a fractal demand zone, and then we can look to execute our positions. So again, let me just draw a path. Let me just draw a square that would represent a demand zone. So again, we would find a last sell to buy region within this impulsive wave. We'd wait for price to pull back into it. Once it's pulled back into it and we have rejection to the upside and a fractal break of structure to the upside, that is when we would look to get introduced. So this is a perfect example of what a buy position may look like on this pair. Okay, now moving over to the XAU USD market. As you can see on screen, I've highlighted a demand zone. Please pause the video and highlight that one for yourself. If we go back, I think it's on the 1 hour time frame that it shows. Yes, you can see this last sell to buy candle. Please mark that out for yourself, as it is definitely a valid demand zone. What I'm wanting to see is price actually sweep this zone, so dig in a bit deeper before trading us higher. Again, what we want to see is a fractal break of structure to the upside for price to pull back and then trade us into one of two supply zones that I have set above here. So mark these potential sell zones out for yourself, and then we can look to get involved from there in longer term sell positions. Because if we zoom out and we look at the overall structure of this market, we have seen that this marked a structural low within this bearish structure. This here is a high that was higher than the previous one, so we are following the laws of bearishness. This was a corrective wave. We've had confirmation of a break of structure to the downside. We've had this last structural low break, which confirms longer term bearishness. Price has now tapped into a demand zone. I believe price is going to trade up into one of the supply zones before trading us lower, taking us lower than these structural lows down here. So when we do look to sell, best believe they are going to generate us with some great returns. Just going back to the smaller time frames, what we want to see here is for price to start trading us higher, creating those higher highs and higher lows, and then we can obviously look to get involved in potential buy positions before we sell longer term. But my main bias and my main goal is to actually get involved in those longer term sells. So if we are looking to buy into this market, again, I want to see a structural high break. So that would be this one, as this here represents the last structural high within this bearishness. Again, why? Because it went on to create the lowest structural low that we have seen within this bearish move. So again, if I just get a path tool out, I'll show you exactly how I want price to play out. I want to see price trade up, break structure to the upside, pull back into a valid demand zone, and then trade us into one of the two supply zones, where we'll then be looking to trade price lower. Again, if I just mark out a pretend demand zone, just so you can see what it may look like, we would then look to buy from here, go long, having our stop loss just below the zone and the peak and the trough created, take us into the supply zone, and then we will then look to sell into the market once we are delivered with a fractal break of structure, which would be somewhere like this. We can obviously trade price lower. We would get involved in sells like so, having our stop loss either below the peak that is created or the zone itself, and then we can look to really stretch out our take profit all the way down. We could set it at this, as this marks the last structural low, should I say, within this impulsive wave higher. Or if we really wanted to stretch our profits out, we could have it as low as here. Now, reason being is because obviously these were the last lows that were created. Now, if on the higher time frame structure we are following bearishness, let me just get a path tool out. As you can see, we have a high set, we have a low set, we have a lower high set, a lower low set, a lower high set, a lower low set. So we understand that price realistically needs to come to surpass these lows here, as it is following the laws of bearishness. Hence why we can stretch our take profit as low as this. We could, probably put it beneath these lows, but to be safe and to guarantee that our take profit is achieved eventually, we would just set it above. But as you can see, this generates us with a brilliant risk reward return of a 1 to 22. So just by understanding the higher time frame structure and then working our way down into the fractal nature of this structure and really understanding the ins and outs and the multiple time frames and the structure that is represented within all of them, we are able to generate brilliant risk reward returns from the positions that we are placing. So again, what I'm going to do is I'm going to highlight this as a break of structure needed. As soon as price has delivered us with that break of structure, so I'm going to set an alert as well. I'm going to wait for that pullback, get involved in those buys before I sell longer term on this market. Okay, so that is going to summarize my segment of this Sunday sessions video. I hope you guys have enjoyed. You'll see on screen that I actually have the Great British Pound to the Japanese Yen and the USD CAD here. What I'm going to do is I'm going to post that analysis in the Learning Lounge group chat. So if you're not involved in the Learning Lounge group chat, get yourself involved, as my analysis for those two pairs will be posted in there. If you have any questions or queries regarding the analysis that I've provided with you all today, then please leave them in the comments below or message me personally on Telegram and I'll get back to you as soon as possible. What I'm going to do now is pass you over to James.
Hey everybody, how are we getting on? Hopefully you've enjoyed Luke's analysis so far. And as per usual, shock, I mean, I've got the wrong chart loaded. I was going to start on Euro USD, but you know what? We're here on gold, so let's just start on this one. Now, if you remember correctly, I was pretty much like undecided in the short term what was going on. I mean, I think everyone that's been following my analysis or the Sunday sessions for some time will be pretty confident in knowing that I do actually want this market to potentially run bearish. We sort of just need to see what's happening. Bearish from the fact that we could see a reversal from this zone, okay, longer term. Now, if that is not the case, okay, because longer term, we have technically broken lower, and we are within bearish structure, okay, just following things structurally. And maybe if we zoom out, you can see that better. Obviously, we can see we've displaced a low. So structurally, after we've seen the displacement of a low, we need to then analyze if that's going to represent a supply and demand flip, okay. So we had a displacement, we reacted from a demand zone, but the important thing from now is, are we going to react from supply? Okay, so there's either two things that can happen. We are either going to react from this, trade up into supply, okay, supply is going to take over, we make a new move lower to come and penetrate the previous low, in which case we continue bearishness, right? If that doesn't happen, obviously we have three demand zones right here identified that price could, at any point, trade us back down into, tap, have a reversal from, and then continue higher to come and penetrate these highs and reach those all-time highs within this market overall. Okay, so that's the longer term bias. Now, as of recent, we've obviously seen a pretty clear break of structure to the downside, and since then we've been heading lower down towards this first zone that I have identified. Okay, now we were range bound for some time. Okay, we were building liquidity to the top and bottom side, should I say? Sorry. And there wasn't really any signs of supply or demand taking control, so it was hard to really determine the future direction. However, we can see that price is now broken out of that to the downside. Right, so what happens from here? Ideally, we want to see price tapping into this zone, seeing quite a clear accumulation form, which is going to be signs that the institutions are getting in control of the market and actually backing this reversal and move higher. So it's going to be a case of seeing what happens. Obviously, we are within a demand zone and a supply zone. Now, if price falls through this demand zone, we'll then be looking at this supply zone for sales. If we react from this zone, we'd actually prefer price to invalidate this because if we react from this, we want demand to be in control. Therefore, no supply should be causing a proper reversal. So pretty much from here, I just want to see it sort of range a little bit, see that accumulation schematic, you know, something maybe along the lines of this. If we just look through. Okay, and then we just take off longer term, right? So probably something along the lines of this is what I'd like to see ideally. And if that happens, obviously we'll be looking to then load in on buy positions longer term. Okay, so that is gold. And to the market, I was actually wanting to start off with euro to the US dollar. Obviously, this is the main market I spend my time looking at. Now, overall, the bias was that I had this demand zone right here. Very similar to gold, to be fair. Where we had that break of structure, we had price trading down towards a demand zone. However, in this example, you see that price has already tapped into and penetrated that zone, and we're sort of holding within this region where we've slightly liquidated the low. Okay, now that doesn't mean a full invalidation. That does not mean that price definitely isn't reversing from this point. It's just showing us signs that demand isn't in control as we'd like it to be, given the tap of a major zone, which is why I'm actually making the assumption here the supply is going to start taking control, hence why I have 1, 2, 3 zones identified, hoping to see price actually pull back into, tap, and potentially provide us with a pretty good sell opportunity. Now, why would this be a good sell opportunity? Because if we manage to get involved from one of these zones, my bias then longer term is that price is going to react from those zones and continue lower, down into some of these demand zones lower in the market. Obviously, we see even the first one of those is 150 pips away from the zone. And if we pull that out again, obviously there, the lower zone is like 600 plus. So, you know, if we can find some sell entries from supply zones and it is following our bias, then there is a lot of profit potential to the downside. On the flip side, if price instead decides that it's reversing here, and this is part of an accumulation. We then want to see price penetrate this high to deliver the break of structure, and then we start looking for buy positions to trade price higher, to come and exceed this high, to continue the bullishness that is within the correctional wave of this structure, okay? Now, that is a decent point in terms of foresight. So no matter what my bias is, I'm always understanding what that bias's place is within the higher time frames, okay? So if price was to actually continue low into one of these, or if price was to reverse here and continue higher, I understand what that means longer term and how that's going to play into our higher time frame bias. Because if price just invalidates this zone, we understand it's probably coming lower to tap one of these before continuing higher. If we just continue higher from now, we know again price is still going to move higher. We're still expecting it to react to one of these supply zones longer term before reversing and starting the new impulse lower. So I have a pretty fluid bias, and I also understand foresight in such a way that I'm always understanding the position of the market and my position within a vast range of time frames, so that I'm never getting too small-minded or naive on the market's movements. Okay, so Euro USD and gold boxed off. How about US dollar yen? Okay, now longer term, I mean, I've run through my bias on this many times. We've actually seen the break of structure lower after a huge bull run. Okay, we've had this pullback. We've recently tapped into a 1 week demand zone. Now since this tap, we can quite clearly see price has pushed away, displaced some of these highs here, but as of right now, we're actually sort of just ranging and holding around here. Now, I don't really like the idea that this is going to sustain a longer term reversal, because of the fact that, right, we've tapped the zone, we've mitigated a major zone. Well, where's the volume? Okay, we're not really seeing much volume. There's a lot of ranging. There seems to be a lot of hesitation on price's behalf in order to move up, so we really need to analyze what's going on. I still have this zone here identified potentially for some buy positions at around 128.735. Obviously, I would like price to reverse here and continue higher to come and exceed these highs, because there's literally so much upside potential. Like from that demand zone, there is literally 2,300 pips. Okay, so huge potential. Now, if instead price falls through this zone, we know it wasn't ready to reverse here in the market. And in that case, it's going to continue lower into one of this or this zone lower. And if that's the case, obviously when that does happen, we have a lot of potential then to start identifying supply zones to get involved from and continue riding price down. Now, technically, if we look in this, where we had this break of structure, when we did have that break of structure, okay, this low right here should have been protected, the low right there. So technically, we broke to the upside, but then instantly broke back down to the downside, okay? And when that happened, we could have expected an S&D flip, like we've spoken about before, which is where we would have identified then, even using those wicks, a very small supply zone. We'll even go into a lower time frame just to view what I mean by that. Okay, so we can see that these wicks, the bottom of that wick to the top of that wick there, is going to represent a buy to sell. We can see price has tapped into this buy to sell region, created liquidity, pushed through liquidity, delivered a bull trap, and has now, quite conveniently, broken structure to the downside. Okay, so quite a clear distribution. Now we can look inside of this and we can say, right, well, we actually do have a couple of zones inside of here that price may now pull back into, react from, and continue lower. So that's a bias in the very short term. I mean, this is the 1 minute time frame, so literally on market open, we're going to see how price follows along with this. But if it follows it nicely, we tap one of these, continue lower. That's obviously going to indicate that this is a longer term move lower. And we can look to start edging in on some sell positions to ride price down, potentially into this zone, if not lower. So I feel like I've covered my bias for the week pretty perfectly there. 3 major markets I'm going to be watching: Euro USD, gold, and Great British Pound to US dollar. What? That's not the one I went for. US dollar yen, sorry. The reason that was in my head is because I just thought what I'm actually going to do in the VIP chat is break down these potential entries we found on this Great British Pound US dollar market. That's why I blurted that market out. No, we're not going to cover it in this Sunday session, but I'm going to create a video on this at some point this week for the people in my VIP chat, so you can see how I got involved in this, how we were profiting at a peak of around 43 RR, no, even more, 45 RR, and how we could have managed this, how we would tackle it moving forward, and just how we can profit in this market in this coming future. Anyways, enough waffling. Thank you everybody for tuning in this week, watching our Sunday sessions analysis. Of course, if you want to stay up to date with how this analysis plays out, how we look to tackle it in the future, make sure to get in the learning lounge, because we literally update our analysis, update all of this regularly. If you want that extra edge, if you want that extra boost, and if you want that extra information, please make sure you check out the VIP chats or the VIP pass. We can unlock exclusive access to mine and Luke's personal private chats, where we post our own in-depth daily analysis. We actually discuss how we ourselves will be entering in on the market, whilst also providing a lot of exclusive, extra, additional educational content. So please go and check that out. But as for now, we'll see you next week, in the next Sunday sessions. Hope you all have a great trading week.